Ladies and gentlemen, we are down here for the first big session of the day. It's about bullion trade in India, the role of import duty, overseas suppliers, nominated agencies, bankers and refiners. All the verticals, functions affiliated with the bullion industry will be represented. Ladies and gentlemen, please put your hands up as I invite the moderator for this panel, Mr. Bhargav Vaidya of B.N. Vaidya and Associates.
Good morning. Now, the first most difficult question which we have, what is the role of import duty? I am not an economist to actually understand this. Whether it is to collect revenue, protect the domestic industry, or deterrent something. Like you may have a very high import duty on liquor because you don't want people to consume. I used to think that. I don't know whether it is right or not, but that is one of the reasons. Now, in light of the GST which is going to come, and in light, let's have a little bit look at, because since we have so many international players here, in light of the way the world looks at it, let us ask this panel that what they think is the role of import duty and VAT or GST, what it should be in context with the Indian market. Can I start with you, Amar?
Morning guys, thank you very much, Bhargav. So first of all, this subject, import duty, the way I see in the context of India, it is more, I would say, to collect revenue, to deterrent. I think the government has used this. If you look at from 2013 all the way, when it was 1% all the way to 10%, it looks like they didn't want import to happen more. So to me it is collecting revenue and making it more expensive so people don't buy. So these are the way I see with respect to Indian context.
And now with coming GST, which is something like VAT, what you think should be the role of import duty, and little bit about your experience in other market in Southeast Asia.
So I think the way I see is, I'll draw some of the analogy from the country where I work very closely. So look at the economy which just evolved around here. So like Singapore, where the gold, whether it is bar or jewelry or any product, has a 7% VAT. VAT and GST is the same. So what they did in 2012, they came out with a legislation where they said investment bar will be subjected to zero GST, and rest of the thing, whether it is jewelry and other products which is consumed by the consumer, will be a function of normal GST. So if I draw some of the knowledge and experience what has been in an economy like Singapore, I see India should adopt something in line with that. If they put 10%, or let's say whether it comes out one level of tax or 4, I don't know. So let's say even 12% GST on gold bar will make things very expensive for the people. And the two, I think it also will create a lot of other noise, which we all know about, whether it is parallel import or rest of the things. So the way I would see is, they should classify gold bar, at least bullion, should be as an investment bar, put a nominal 1-2% what they want to collect, or the percentage which is required, at least prohibitive to have some of the thing which I have been hearing all along today and as when I was in Mumbai, which is parallel import. So is it 5%, 8%? I think I am not the right person, but in my view, it is one of the things which will be used to manufacture something which people will consume that has the GST. So it can be 0, it can be 5, I don't know. But these are the formula in my view should be adopted.
Okay, I request you to address this also in your role as a refiner, and now with a refiner and a bullion company with subsidiaries around the world. What do you think the role of import duty should be?
Import duty, if you talk about import duty, I agree with helps in a value chain. GST, whenever the value addition is there, you put the value GST over there, whether it's refiner, because refiners, if they are importing Dore, there is no import duty. It's a sentimental duty,
Yeah.
right, which comes part of the GST.
Correct.
So same way, if the bullion is coming, they have to work something that way. Whichever the place value addition is there, they put the GST. And so other parallel economy which we are talking for last few months in all the conference and all can be taken care of.
Okay, you are very smart. You know, you and your friend Rajesh and all this, your association always put a countervailing duty. So you knew GST is coming and you would not have any loss. All the other bankers would have it.
So see, whatever the GST will come in a total output, that will be applicable at the end of the day for the jewelers. See, at the one level, suppose the import duty is at 10% today, 10.3. And for us also it is a nearby same. We are competing with the bullion banker in that way in the local market.
Satish bhai, you are a large direct importer, a nominated agency. You have been buying from other suppliers also in past, I don't know now, and also a refiner. With this your role, what do you think is the role of import duty in India now in light of the coming years? What rate you would like to suggest for Dore and Go?
I don't have much knowledge on the GST, what will be the rate of duty and how it will work. But I can tell you about the present duty structure that we have in the country, which is 10.3% on standard gold and about 8 to 9% on Dore. And my feeling is that they have to make it very, very simple. The duty structure is such that on import of studded bar there is a duty of 10.3%. They may change the custom duty on this thing. Simultaneously, they have to make changes on in the excise also, because it affects the Dore import. And the rate of duty are so high that there is always a fear if the government reduces the duty, what will happen? People will lose a lot of money. A small news article in any small newspaper affects the market to a great extent. If any news is published that the duty may be lowered by 2%, then we don't see any business for 15 days or a month, because people are expecting that duty may be lowered. So they have to make it very, very rational. Ideally, they should make the duty zero on import of gold, as Amar is saying, on the investment parts. And the duty should be only on the jewelry aspect, when it's converted into duty. As far as Dore and standard bars are concerned, there is not much difference. Because Dore, after refining, is converted into bars. So duty difference between the two has to be very minuscule.
You were telling me something about the way it should be calculated, that how duty should be levied.
There is another factor. Every 15 days they are changing the tariff rate, and typically it happens on any working day, and that happens at 7 o'clock, which is effective the midnight of that day. So I think what they can do is they can fix the duty either on a monthly basis and should be declared on Saturday effectively coming Monday, rather than effectively that very day when the transactions have already taken place.
So you would be very happy if it was part of finance bill that this many rupees per gram is the duty, whatever be there. So you would like to go back to the system which we had in the past.
If at all they have to change depending on the price, that can be done maybe once in 3 months or once in 6 months.
So that would be more healthy for this market. You deal with around the world, and anywhere else in the world, which places you know there has been import duty on gold? Because I don't deal so much around the globe. Can you just tell me, and how much headache you have thinking about the Indian duty being changes as a overseas supplier?
Maybe Amar can tell me, there used to be a 3% GST earlier in Singapore for the longest period of time, as I remember. And it did actually hurt the trade. Singapore has now taken on pure material, Singapore has taken it off. There is no other place which I know of where there is a duty. And looking at the statistics recently, which I have seen from last conference which was held here about 3 weeks back, and India had only imported about 126 tons compared to, so import duty finally has actually sunk in to the point whereby imports are really down on the official channel. Unofficial channel is a different ball game altogether.
So you think what should be the ideal thing for Indian market? A low import duty? You think it will help? Because you have been half Indian for most of
No, that's true. I do agree. They need to reduce the duty to the point whereby you discourage the unofficial channels to come in. But to answer your question, why the import duty is needed, import duty is needed only to fill the budget gaps. Because we don't produce anything, so there is no question of protecting any industry by imposing duty, and by reducing it to somewhere between 5 or 6%, they may be able to restrict the amount which is flowing in from outside.
I'll come back to that on that. Nancy, I hope I pronounced it correctly. I would like to ask you two things. One is the import duty, the way we work in India. And how would you look at it as an outsider? And we copy Russia a lot in a lot of things. And little bit of your knowledge of international duty, can you just share with us and what we should go with our roadmap for it?
On the popular topic of GST and import duty and excise, I think we all know why import duty exists, excise exists, and VAT in the form of GST, other taxes just to collect revenue, of course. And you should really weigh the impact and I think the volume of imports which are coming to the country. I think the overall, it all depends on the rate, and I think that overall it shouldn't be more than combined GST and all the other import duty and excise should be more than the current one. Because otherwise, on the volume, in such a big country with such a huge demand for gold, traditionally, and we hope that it will resume soon. I think it's, if the final consumer suffers now, I think there will be further period of adjustment. Of course it will recover. I do believe that in India everything will recover and the demand will be there, but it will be simply longer now, and we've been waiting now for a couple of, nearly 9 months now really, and it might be further a year or two before people start realizing that there's no going back. They have to pay GST. So my idea is, for example, if you take Russia, we do not consume lots, so we produce a lot. We do not consume a lot, we do not import a lot. And that's why no one really cares that there's a VAT of 18% and there's an import tax of 6% because there's no import of gold. So you can keep it like that. But when there's demand, then sometimes the proportion, you should look at everything and then drop the taxes, the GST special ban for import duty in order to collect more revenue, I think, for the country and to exclude, of course, the parallel trades which exist. That's on the GST. And I also think that with the GST, when I think it will create some more problems later on. One should be very careful because in other countries, if there's input-output tax, then there's more of not smuggling but other kinds of financial crimes which you will probably see or will be attempted here. So one should be really careful. I know it's still the bill just passed and nothing is decided finally, but yeah, that's my view, that it should be, of course, less than people are talking, or the current taxes payable. And on the other one, as an international bullion supplier, we've been doing business in India since 2013, and we were really unlucky when we started. And then all the changes, 2018, 2014, and then start trading houses, and this one, and that one, so we kept on changing the situation. We've been patient, and whatever the rate is of the GST, import duty, whatever the domestic problems are and how they will be resolved, will always be there. Of course, we'll adjust. The only thing for the international suppliers, it's important that they do not occur very often. Because it's very difficult. It's not only here that the situation is changes, it's internationally. It's the financial sector is being more and more regulated. So any changes here and the changes on the international market, so So it makes it very difficult to progress, to adjust with the KYC, for example, with all the legal issues, because when something changes in India, say in the bullion market, then we have to go through the whole process again with the legal opinions, be it English law, then we have to do it here as well, nominate a local lawyer for the Indian legal opinion. So it takes time. And finally, I just want to say that to facilitate the trade for the international bullion suppliers, and I think that might be discussed later on at the last panel, I think, I would very much like Indian bullion market to have a look at the international experiences like the Shanghai Gold Exchange or the Dubai DGCX. Without going further, I think it's just overdue a proper physical gold exchange, similar to the international board of the SGI, or I don't know whether they have best practices over there. You're talking about the best practices in the world. Probably you can't say that something is the best practice. They're different, and you have to find your own unique practice. And I think it exists. You just have to try harder, and you'll find it.
And let me tell you, we have somebody in the government. So the people in my profession, chartered accountants and lawyers, are always kept busy. We keep on changing the laws. One thing which I'd like to ask this panel, and maybe in the audience also, I'd like to put a poll. How many of you think that a change in import duty actually affects the demand? We have been told that higher import duty has been done to reduce the demand so that we import less gold. Does an import duty change? And let's take the total supply in the country from 5% to 10% or 2% to 4%. Does it make any difference to consumption pattern in India? What's your view?
In my view, yes, definitely, because it adds up 10% on the price. So maybe not immediate, but in the long or medium run, yes, in my view.
It is to the extent that the disposable surplus with the person to spend his bills, so that much gold will come less.
Absolutely, in my view, yes.
Vicky, what's your view?
I have a little slight different view. For Indian consumer, it's not what is the tax has been put on the import duty. Basically, total price. What is the total price he is paying? If he is paying a total price consistently 27,000 or 28,000 is fine. There is no such a demand. But if from the 27,000 price goes 28 or 29,000 because of duty or because of incremental price, then demand gets affected.
Yeah, so it
That's
is price effective, but not necessarily duty effective.
Yeah.
To agree with Mr. Agarwal, consumers they don't bother much about the duty element.
Duty is not necessarily a deterrent.
Absolutely.
Harish bhai, your view?
I agree. Duty is, I think, like it's the demand in India probably more or less what we saw as you just said it earlier, 2080 and other things. In spite of having a government imposing 10% duty, premiums were still pretty high in India. So I think it's a price inelastic. This has more to do, the demand which we are seeing in lower in India has more to do with government or rather authority asking for PAN card.
You want to make a comment on it? Do you think Indian demand is duty neutral? No. Then I can just ask you to raise the hands. How many of you feel that a duty increase will actually reduce consumption of gold in India? Can you raise your hands? Okay. Can I have the reverse, that Indian demand is not duty conscious, but it is only price conscious, so duty will not affect? I think the view is something very, very common. If you are making a note, I would like you to note this down. A duty increase is not going to reduce imports, if that's the thing. Let me go to the next topic which we have, which is things like role of nominated agency. And let me put nominated agency and nominated banks together just now. What role do they have in India? This is a preferred class which are allowed to import bullion. One are the banks who apply for, who have certain capital. I can understand that. Second, they are, because in past it was felt, and I have been told this at the highest level, that they felt that the nationalized bank, SBI, was not doing the job what it was supposed to do for helping the gold industry. Therefore, in the control era, MMTC was given license. So, we had the government PSUs which were given. If we go back to the liberalization when we started, it started with SIL scheme, and as an exporter at that time, we felt it was a birthright to get incentives. So there are a lot of nominated agencies who are given license on basis of their exports. It is preferential if you are in gem and jewelry sector, and if you are in general sector like Reliance Industries, then you get it. And there is a fourth criteria, and we bring it. My friend Chandler Saab is also here. So that is a best example when a group of gem and jewelry dealers, like this was a group of diamond dealers, they represented to the government that we need to import bullion for supporting our industry, and it was given license without any of the other requirements which were. There is no capital adequacy check, there is no export ability check, but if you are a patient, you are given a license. So that is how the legal position as I understand today. You can also differ with me. Now in this environment, and after the maturity of the industry as it is today, do we need canalization of this nominated agency? Or since some of them are also given this advantage that only you can do you think some additional duty is put upon them? Who would like to start? Amar, you have been in all roles.
If I have been in this role, I think whether on one form with a nominated bank or a supplier since 2002, 14 years.
A bullion dealer in before.
I have not seen change other than some of the nominated agency like based on the export being added or being deleted. So these were the only few changes I have noticed in 14 years. The rest of the thing, few bank come in, few bank going in.
Now,
I have not seen any change in business.
But Amar, you have been very, very nice when you were in the bank here and used to already take advice. Do you think that this canalization has a value add to the system? Do you need it?
In my view, again based on the experience of the developing country, I think we need it, and I'll tell you why. A jeweler who imports, let's say, by 1 kilo or 5 kilo, where do he go? Can he go and meet an institution like JP Morgan or HSBC or any one supplier and say, supply me 5 kilo gold? So one answer is, so first of all, I think if he goes and say, I want to import 5 kilo gold, the premium charged by the logistical and rest of the cost could be very different what he walks into a refinery, let's say a bullion bank or nominated agency, and say, I want to buy 5 today, what is the price? So I see, in my view, there is a value as long as those people are doing their job properly. I think that's my job.
I would say there could be somebody like, Caps Gold is not here, was supposed to be on this panel. You may like to deal with him directly, or no?
So that's why I see there are, I think yesterday somebody said 300,000 jewelers. So or 250,000 jewelers.
Okay, but you think there should be this route compulsory? Because I can always exit.
In my view, at this stage of the infrastructure and the state of knowledge and experience, we still think we need, and the reason as follows. We have been importing bullion, as you said, from 98, whether in this form or another form. We still don't have a free zone where bullion can come sit together 100 kilo, 200 kilo. We don't have proper infrastructure to handle. And this, so I think these are the things, if being handled, then could be possible.
Sure. Saraj, can I have your view? Do you see this canalizing structure anywhere else in the world? Do you think we need it?
I think there's nothing wrong with the current structure. I think, of course, from the viewpoint of the international bullion supply, the more people we have, the more companies we have, importers, the better. But I think it should be regulated, this type of business, in one or another form. And I think licensing exists in many countries, including Russia and China, for example. In Russia, it's the other way around. It's actually exporting and export licenses. ideally it should be free, but in reality, I think in the current situation, I think the system works well. I mean, star trading houses, and they can, well, it's fine, absolutely. If there's, again, as a supplier, as I said, we are quite happy to work with whoever is authorized, not licensed necessarily, authorized to import bullion. But I think the current system works quite well, and I think it's a domestic problem. Whoever is importing, we're happy to serve. At the same time, maybe not lots of companies will be doing that, even if there's a free import arrangement here, or semi-free import arrangement, because on the other hand, it can be regulated by allowing only LBMA members to import or to supply bullion, which, by the way, just eliminates the smaller companies out of the equation. So which leaves again exactly the same. Although technically you can say that it's free, anyone can do that. But will JP Morgan work with the ABC Limited from, say, Agra? I don't think so. So
Whenever it comes to transparency or anything, I always remember your statement. When some bankers used to ask you to say, who else in the world is ready to quote two-way price without knowing who's on the other side? And you used to always stand for it, saying that I am the only transparent supplier compared to many. And when people were talking about responsibility and transparency, I was missing you. Because I thought you would get up and call. In this environment, looking at dealing, if you are allowed to deliver goods directly on single arms exchange, just you have a subsidiary in India and you can deliver. Do you think this nominated agency, there are 2-3 next to you also, do they have a value add, or we should have a free trade? What is your view?
You are asking a tricky question, but the real answer, my real answer is this nominated agency, the whole concept, maybe it worked at the initial stage. At this stage, it's a club which is reserved for privileged people. Whether they add any value, I don't think so. But do we need some form of a regulation vis-a-vis financial institution for the import, to regulate some sort of an import? That might be needed. But actually, I'm not sure whether maybe the nominated agencies can defend themselves and say, what role they are playing. That's I will hand it over to Satish for that.
I may just add one thing, that I am even not sure whether there is any benefit being by a nominated agency. I wish I could ask this question to Prithviraj also, because he would say it's more of a liability. Prithviraj, can you have a comment that what do you feel? Was being a nominated agency an advantage? Do you think it was a big advantage because you have chosen?
I think it should be the open. Now it's almost 97 to till today. It's too much time.
Satish bhai.
I completely agree. They should make it totally free. And you don't have to start from 1998. You have to look at 1994, how, for the first time, the gold imports were allowed. See, they were allowed by any person under a special import license. You buy a license which was a freely transferable license. You buy a license and anybody could import. There was no restriction on any person. In 98 and 97, they changed the policy and the so-called OGL, which is Open General License.
But it is canalization. I call it canalization. Only few journalists called it OGL. Government of India has never called it OGL.
So it was a canalization where they initially allowed banks authorized by RBI. Then a list was added, PSUs, public sector undertakings, authorized by DGFT. And in 2007, they added this nominated agency, the PTH and SPH. Pratibha is right in saying, see, today, out of whatever 800 ton is imported, some 300 tons, 250 to 300 ton is imported under the Dore rule. The licenses are freely available. Anybody who has set up a refinery, which is not a very big thing here, he can apply for a license and can import Dore. Dore is nothing, and after refining it takes the shape of a standard bar, which is being sold in the market. So then there is no restriction on the import of Dore. Why should there be any restriction on the import of standard bars?
Can I add one more question to you?
Yeah, please.
Sir, as a refiner, do you think there really has to be a license requirement to import Dore? Or you'll be very happy to import Dore and sell it to BK and anybody else also want it? Do you think we need to have a licensing?
There should not be any requirement, but the fact that there is a requirement which they are giving very freely, there is any restriction getting a license. So why should there be a restriction on import of standard gold bars? Let there be free competition amongst the banks, PSUs, the non-traders. Why not? Anybody will import. The banks will choose who should be their counterparty. The importer will choose from where to import. I don't think this nominated agency thing is working at all. And now this nominated agency, there are three categories. The banks are regulated by RBI, PSUs are regulated by BTFT. This nominated agency, there are different reporting systems. You have seen what has happened under 2080 scheme. There was a restriction, the banks were, less we comment about that, the better.
I think a lot of them enjoyed it when it was 2080. Anyway, we have never seen that sort of a returns. I think Amar will migrate to India if you give him this is the returns which you get. He will resign any of this fantastic job if you guarantee him the 80-20 supplies coming to him.
And to restrict that kind of secondary refining capacity in India, you're shooting yourself in the foot. You have to make it available. All gold should be available to all refineries.
Anyway, I have one last question because we have overshot the time. I like this word which you used, investment bar, which is exempt from any point of tax almost everywhere in the world. One, what size you will recommend as an investment bar? Second, it should be imported bar or it can be any bar which is serially numbered and stamped as per the IS or something. And you as a refiner, you just reply whether we are ready to do it. We can do it.
So,
Just 1 minute.
yeah, so just I think quickly, when we went through this process, which I was part of that, so I can just share, it was very simple. The trade people, they sit down together and they said, these are the criteria to look at. The criteria were, and it should be very easy for custom or the relevant authority to look at and say, yes, these are investment bar, these are not investment bar. And they were, it should be a BMA or any refinery which is approved by one of the associations which works with the authority. So it has to be like they came out LBMA or any refinery, and it has to be, purity has to be 995, and it has to be in a form.
What are the size recommended?
Size? I think Albert Chang is here, maybe he can comment.
1 kilo and below.
Yes, kilo and below.
1 kilo and
So
below.
it can be any form.
I can even have a 10 grams. Yes. Do you think that the BIS scheme and numbering and all that which we have, you are vice president of the association, the president is listening, so I am asking you, whether we are equipped to fulfill this criteria and put a paper that zero tax on this particular thing?
100%.
So this way, will this help Indian industry? Zero tax on investment?
I think so.
Harish bhai, what will you react?
It would. In fact, a lot of places you have seen, even I think in Europe, it's the same thing. As long as what the government's first aim is achieved, and that is that purchase itself is transparent enough, there is a traceability.
You'll be ready to supply investment bars in the small sizes they want?
Bars, I think anything up to 1 kilo really. Good delivery bars.
And
so
I think we'll thank the panel here and thank the audience to wind up. I got this message sometime back. Thank you very much.
Mr. Harish Pawar. Let's have a memento for Mr. Raman Singh, Mr. Sergey Nenashev, Mr. E.K. Agarwal and Mr. Satish Bansal. I would like to invite the Managing Director of World Gold Council, Mr. P.R. Somasundaram, to present a memento to Mr. Bhargav Vaidya.